We're here in Monte Carlo for the Rendez-Vous de Septembre. For Invest TV, I'm Richard Banks. And I'm joined now by Tanguy Touffut, who's CEO of Descartes Group. Tanguy, good to see you again. Welcome.
Good. Thanks for having me.
So Tanguy, insurance and reinsurance, broadly speaking, have been bought in the same way for hundreds and hundreds of years. Could that be about to change?
Yeah, as you said, it has been very effective for hundreds of years. So I don't expect massive changes. Typically, distribution will remain the same. I think in the next 10 years, I expect brokers to stay in the middle, in the center of the game. That said, I expect underwriting to be disruptive in the sense that there are more and more data, more and more algorithms. We see that AI is typically a game changer for unstructured data. So I expect underwriting to be improved, modernized through AI technologies. I expect products also to change drastically. We see that in many sectors, instantaneity, speed, transparency are key. So I expect insurers, cedants, I expect risk managers to ask for better products. So clearly, I expect many disruptions for product design, for product management. And of course, I expect new perils, new risks. I talked about AI. Of course, it will be so game changer for underwriting, but it will add some risks that we are not completely aware of. So clearly, there would be new needs, new products to meet that kind of need, and some surprises about the potential losses that are not well understood yet.
So you're clearly experts in the parametric game. Tell us a little bit about how that fits into your vision of the future.
We are a data company. We are very strong in terms of the algorithms we can develop ourselves. We are more a tech company than an insurance company in that respect. So if we look at the company, 65% of our staff is actually more software engineers, DevOps, and data scientists. For us, it's a wonderful opportunity to have a forward-looking view. If you look at the insurance sector, there's a belief that only the paranoid survive, which means that basically you need historical data to dare to take a risk. In our case, having strong data sources from satellites, from radars, from different IoT gives us a better comfort, and we are able to underwrite what others will not actually dare to underwrite.
So you've talked a bit about perhaps emerging perils or new perils. How prepared is the reinsurance industry to address the future demands of its buyers?
I think, as I said, we prefer to wait for, I would say, historical data before to move on. I think insurers are asking, of course, for better protections. Typically, there are issues around the retentions they face, and parametric insurance was a way to cover, I would say, deductibles and retentions since 2023. With very interesting products that could actually cover the modeled losses or the underlying perils, depending on the client and their needs. So overall, I think the reinsurance industry will be forced to invest in new technologies. We are an industry that is used to use data, but still we are just at the beginning of something that will be much bigger due to, again, Gen AI, LLMs, and different artificial intelligence techniques.
So Tanguy, one last question, if I may. What issues are being missed now that will matter most in the future?
I think we're in an industry that still thinks that insurance is a zero-sum game. So we see now that the insurers face some losses in half one. Reinsurers made a very nice return on equity. So I think we need to think long-term as an ecosystem and make sure that everybody is actually making profits. So there will be probably a new deal that will be closed for the next renewal, making sure that the insurers will benefit from probably lower retentions with, I would say, prices that will be aligned with the view of the risk.
Tanguy, lovely to see you again. Thank you very much indeed for your time.
Thank you for your time.
For Invest TV, I'm Richard Banks.